Welcome back. This is Indian Open. At this point in time, the Asian markets are declining, and in fact, over the last 1 hour of trade, we've seen losses for both the Shanghai and the Hang Seng widen. So there are certainly some concerns coming through. The Nikkei is also trending lower by as much as 0.4%. What does it mean for the SGX Nifty? Well, from marginally in the green, it's now turned marginally in the red. So perhaps we could expect a little more weakness to come through, at least in terms of the opening. But what are the derivatives cues telling us about the markets and what we can expect? We have Navneet Saluja joining us to give us an idea. Navneet, good morning.
Yeah, good morning. Well, all eyes today will be once again on Bank Nifty, which underperformed yesterday, today being Thursday. So we'll be watching out for the weekly options expiry day. But looking at Nifty futures, let's just pull up that. The futures premium actually went up in yesterday's session, though activity was not too much on Nifty side because of the monetary policy. So 3% higher for Nifty futures. Remember, Nifty has been making higher highs, higher lows for 9 consecutive sessions now. But if you look at Bank Nifty, which underperformed yesterday, that negated that formation of higher lows at least in yesterday's session, because we did see some bit of unwinding coming in for Bank Nifty futures, 11% lower. Remember, yesterday was a second straight day when we saw some unwinding coming in for Bank Nifty futures. Well, moving on to the put call ratio, as I said, more activity was seen on Bank Nifty. There was a lot of call writing seen ahead of weekly options expiry. So Bank Nifty PCR went down quite sharply to about 0.96. And if you look at strikes from the Nifty space, there was put writing which continues actually on 11,200, 300 and 400 strike. But this is the mark now which the bulls and the bears will be fighting in today's session as well. That's 11,400. In terms of FI data, nothing much happened, but definitely there were some long positions being seen on the index futures. Contracts were added to the tune of 11,500. On the index option side, on the put side, there was more activity. So put short and put long saw contracts being added to the tune of nearly 9,000 respectively. And in terms of stock futures, keep an eye on Coal India. That was your top gainer on Nifty yesterday. Fresh long positions were seen for that one. And Tata Global Beverages, disappointing set of numbers coming in on all parameters. Short position seen post the earnings, and also Exide disappointed with the numbers. So let's see if the short continues for Tata Global Beverages and Exide in today's session as well. Back to you guys.
Hey, thanks for that, Navneet. So some stocks to monitor. In fact, let's talk about some of those with Parthiv Shah, director at Tracom Stockbrokers, joins us on the show. A bunch of managements lined up as well. So let me jump straight to the topics at hand. Parthiv, good morning and many thanks for joining in. Great having you as usual. I'm going to start off with HEG. I know you track that space closely. What did you make of the numbers? The stock nudging new highs almost every single day. Does a delivery of this kind only, kind of strengthen your belief in the company?
Good morning, Neeraj. Thank you for having me on the show. Yes, Neeraj, I remember last time when we were discussing on these two graphite electrode stocks, Graphite India and HEG, one important point was that in the entire world, out of all the companies that are producing these high-grade electrodes, Indian companies, the two companies having the capacities that they have right now and the supply of needle coke that they are commanding almost 20 to 25% of the global world share, which is extremely important point. And more importantly, of late, there was definitely talks about the prices coming down, but all the news points coming from China, because these two stocks have to be tracked not domestically, but purely based on what's happening with the global macros, and especially that in China. And in China, recently, all the news that I'm reading in terms of the curve down in the sinter products, the curve down in terms of low grade utilization of the blast furnaces, all that leads me to believe that currently the 5% capacity in China, which is using electric arc furnace, will certainly go up, and with that going up, their demand and their appetite for high grade graphite electrodes is certainly going to go up. And world over, if you go to see, no new capex has come up. Recently some Japanese company and US companies are talking about debottlenecking, but I really doubt over the next 3-5 years that would saturate the existing demand. So I think going is very good. It's very important to track these companies based on the forward contracts that they're having for the graphite electrodes. They are low cost manufacturing bases, so I think it's best to hang on with them. Earning per share and all the parameters, the margins are too good to be true for now. But even if they were to normalize at 50-60%, they would be great cash flow generating companies. So hang on to these two names.
Okay, Parthiv, hold that thought. Let's address an important earning from the mid-cap space. We have Gravita India, where its revenues have jumped as much as 61% on a year-on-year basis. We are looking at a little bit of contraction in its margins, but once again, profits rising by as much as 9%. Let's get an understanding of how the quarter has gone by and what we can expect. We're in a conversation with the Chief Financial Officer of Gravita, Sunil Kansal. Good morning, Mr. Kansal, and thank you so much for joining us. Mr. Kansal, let me just start off by talking about a little more about what has actually, come down when it comes to your top line, what has led to that growth. Okay, I think we're going to come back to Sunil in just a bit right now, but if I can just reiterate Gravita's earnings right now, we did see about a 61% growth on a year-on-year basis, and net profit, of course, has risen by as much as 9%. That said, we have seen a very big move in lead prices, and on account of that, we have seen, well, margins contract to a certain extent, but we've also seen revenues move up. Margins currently at around 7.5% as against 9.8%. Again, when it comes to scrap collection, well, that stands at around 25,668 MT in the first quarter as against 21,000 odd. So we've seen a little bit of an improvement there as well. And again, production from scrap is also up as much as 59%. So some positive cues certainly coming in for Gravita. Of course, the lead and the key focus in this area of the company is lead. But we have seen some traction when it comes to aluminum and turnkey projects as well. Well, that said, we come back to Gravita in a bit. But Parthiv, if I can take a question again in terms of some of the mid-cap earnings over the last 2 or 3 days, is there anything that stood out for you?
See, frankly, I think overall, if I were to see the numbers, I think one number that I'm really liking, despite the fact that maybe some miss was there in terms of the street consensus, was Pidilite. I think this company, I think, is extremely well positioned in terms of having a huge compounding of its earnings over the next 5 years. And I think the way they have placed and positioned their businesses, and extremely important point being that, yes, the margins have certainly contracted from the historical highs of around 24% to the current run rate of around 20-21%. But still, I think being in this business of home building solutions and especially adhesive, commanding such margins comes only with extremely strong brand and moat around their business. So I think Pidilite, which reported numbers, I believe that I think they were extremely encouraging. And going ahead, we are very, very upbeat. I believe that some of the raw material input cost is coming down, and we've seen a history that whenever that happens, the margins tend to expand further. And all the things that they're doing in the home building solution and trying to innovate in terms of the product, I see amazing volume growth. I see amazing value creation is quoting at around 42 times FY20, which according to me for such companies is not very expensive. So certainly Pidilite would be one company I would suggest buying here and also holding it for the next 3 to 5 years.
All right, I think we do have Sunil Kansal of Gravita India back with us right now. Mr. Kansal, good morning, and thank you so much for joining us. If you can hear me, could you tell us a little more about the growth in the top line that we've seen, and also what is the extent of volatility that you've seen in your lead prices, which has led to, well, the slight contraction in margins?
Yeah, basically the growth is coming from the more scrap collection. As we are a recycling company, we are all dependent on the scrap collection from domestic market and international market. So we have increased the scrap collection from domestic market by 30% and also increased the volumes of scrap collection from international market by 40%. So this growth is coming, revenue growth and the bottom line growth is coming from this factor. Coming to your question related to the volatility, yes, the prices are going down, but the impact on the company for this volatility is negligible because we are on a hedge model, and whatever scraps we are collecting on day-to-day basis, all the scraps are priced to the customers on immediate basis, or we are taking some hedge contracts.
Right. So, Mr. Kansal, based on what you've told us about growth for this quarter, can we expect this to come through for the rest of the financial year, or do you think there will be some amount of lumpiness as we move into the next 3 quarters?
This growth, we are expecting approximately 35 to 40% growth on year basis as compared to the last year. So this growth is part of that growth only.
Right, Mr. Kansal, and can you tell us a little more about the scrap collection going forward as well, considering how things are panning out when it comes to global markets?
Yeah, we are increasing the number of locations in international market where we are collecting the scrap from various locations. More than 17 countries we are collecting at this moment. And we are increasing some more countries in this collection network, and we are going some more deep route, like if we are collecting at one location in one country, so we are increasing the locations of in each country. We are adding up some more locations. So the collection will be more deep rooted, and we'll getting more scraps from the international market, and domestic market is also improving. As recently we have done some contracts with the Amaraja and HBL for buyback of their scrap and selling them the finished goods in terms of lead. So that contract is also supporting us in terms of increasing the volumes.
Okay. Mr. Kansal, a final question. If you could just tell us a little more about your current capacity as it stands. If I'm not mistaken, you have commenced commercial production in one of your units in Jaipur. Where does that capacity stand, and what about utilization?
Yeah. Total capacity as of now we have is 164,000 tons, including lead recycling, aluminum recycling, and plastic recycling. And we are increasing this capacity to another 53,000 tons is being added in this year, FY 18-19. And the utilization currently is at 50%, but we are adding some more capacity at different locations. So we should be close to the scrap. The idea is to save the logistic cost. So because we are a low capex company, so we don't see any hurdle of increasing the capacity at the right location, strategic location. So we are putting up 2 more plants in Mundra and 1 more plant in Ghana to save the logistic cost.
Okay, Mr. Kansal, we'll leave with that. Thank you so much for joining us and taking us through the quarter's numbers as well as the outlook.
Thank you.
All right, well, there you have it. That's Gravita India. We're likely to see some strength come through, at least in terms of opening, considering we have seen such a good growth with respect to its top line. But there'll be plenty of other stocks which will also be in focus today. Of course, we have 2 earnings from the Nifty coming through. You had plenty of stocks in news as well as earnings post-market hours. And we'll also be talking a little more about the Sumitomo Excel crop care deal. So we have a research team joining us. Good morning, guys. Thank you for joining us. Let me just start off with what we can expect from the 2 Nifty companies. So, Shraddha, if I can start off with Indiabulls Housing Finance.
So it's expected to be yet another strong quarter for this company. Net profit is seen growing by about 28% to 1,009 crores. Loan growth is expected to remain strong and to come in at 30+% sort of levels, a trend that we have seen in the previous few quarters. Spreads, however, expected to continue to moderate given the rising share of home loans. Nevertheless, they're expected to remain within the management's guided range. Asset quality expected to remain steady on a sequential basis. So should come in, the gross NPA ratio should come in between 0.7 to 0.8% sort of numbers. So important to watch out for the incremental spreads and asset quality trends, especially on the LAP and corporate portfolios. AUM growth guidance and traction, affordable housing finance and other things that we're watching out for, as well as the India's impact on net worth and earnings. But overall, strong quarter.
All right, and we'll also have ONGC's numbers, Sumit. What can we expect?
Well, a strong quarter is expected from ONGC in this because of the higher crude oil and gas prices. Now, if you see, the revenue of the company is expected to be higher by close to 12% to 27,000 crore rupees, while the EBITDA is expected to see a sharp jump of close to 69% to 14,000 crore rupees. Margins are also expected to expand to 52%, while the net profit is expected to be higher by around 13% to close to 6,700 crore rupees. And the net realization number is expected to be in the range of $72 to $74 per barrel, versus $66.7 per barrel reported by the company in the last quarter. Now, the quarter was completely aided by higher oil prices and the gas prices. Now, Brent crude, that is the Asian benchmark, averaged around $75 per barrel, while the gas prices were higher by close to 6% to $3.06 per million British thermal unit. Now, on the operation side, if you see, the crude oil production numbers are expected to be flat at around 6.1 million metric tons, while the gas production numbers are expected to decline by around 4% to 5.8 billion cubic parameters. On the financial side, brokerages are expecting no subsidy burden in this quarter also, and because of this, the net realization of the company could be at an all-time high of around $74 to $72 per barrel. Now, the EBITDA is expected to see a sharp jump because the last quarter EBITDA was impacted by higher exploration cost and other expenses, while the net profit jump is expected to be lower because of lower other income and higher interest cost. Now, other income is expected to be lower because in last quarter the company received dividend from HPCL and IOCL, while the interest cost is expected to be higher because of the debt that the company has taken for HPCL acquisition. Lastly, key things to watch out for would include the oil and gas production numbers, the development plan of KG Basin, the capital expenditure plans of the company, the clarity on funding of repayment of the debt related to the HPCL acquisition, and any clarity on subsidy burden will be a keen thing to watch out for in this ONGC earnings.
All right, Sumit. Well, of course, that said, after months of deliberations and discussions, we finally have some sort of conclusion when it comes to Excel Crop Care as well as Sumitomo. Darshan, what are the contours of the deal?
Yeah, so basically what will happen is that it is a reverse merger in which Sumitomo Chemicals now will be listed. They already are the promoters of Excel Crop Care. They own almost 65% stake in the company. Now, what will happen is that the deal is the fact that if you have 2 shares of Excel Crop Care, you will get 51 shares of Sumitomo Chemicals in India, and over the next 8 to 14 months, this deal will be concluded. Basically, what you're seeing is Excel Crop Care is engaged in the business of agrochemicals, and it manufactures pesticides and formulation. Sumitomo is engaged in manufacturing and selling of crop protection formulation. So the synergies definitely are good. What the management has said in terms of the synergies, the merger shall result in consolidation of all the India operations under one arm. Basically, the operation synergies will come in at multiple levels for the company, and there will be significant scaling up of the distribution network across India and synergies in product marketing. Basically, the new shareholding that will be that the promoters will own 80.3% stake in the company, and the public will own almost 19.7% in the company. So there will be an probable OFS that will come in where the shareholding comes down to 75%. In terms of the market cap, that will move from 5,000 crores to close to almost 9,000, over 9,000 crore. But return ratios pretty much and valuations will remain at a similar level what it is. But nevertheless, it's beneficial for the shareholders of the company.
So we watch out for Excel Crop Care as well. And finally, Saloni, what else are we tracking with respect to stocks and news, perhaps some other earnings?
So stocks on my list are a few companies that reported June quarter numbers yesterday post market hours. First up is HEG. The company reported very strong set of numbers yesterday with revenues increased significantly by 7.7 times to 1,587 crore, while net profit stood at 770 crore as compared to a net loss seen in the corresponding quarter last year. EBITDA margins expanded from 11% to 74%. Well, next up is Jindal SAW, where we have seen revenues picking up over 60%, while net profits saw a growth of over 50% in Q1 FY19. Operationally, the company did really well as EBITDA grew up by 70%. Moving on to V2 Retail, the company reported strong top line along with bottom line growth of nearly 30% each. However, on the contrary, it was a disappointing quarter for Triveni Engineering and Industries, where we have seen revenues declining by nearly 12% and net profits decreasing by 40%. Margins too saw a contraction of nearly 600 basis points. So we also saw some weak set of numbers from Reliance Infra, wherein revenue, there was a muted growth in top line, while net profits declined by 19% and margins too contracted by 300 basis points. Agam, that apart, we are also tracking few companies that reported monthly auto sales numbers yesterday. First up is Hero Motocorp, wherein we have seen two-wheeler sales growing by nearly 9%. Now, this was more or less in line with what the street was expecting. Eicher Motor sales came in below expectations. It grew by 7% to 69,000 units as compared to the estimation of 76,000 units. And lastly, Tata Motors domestic sales were 21% up for the month of July.
Right, Saloni, thank you for bringing us those details. But Parthiv, I'm going to take the matter of ONGC ahead with you. How are you rating the stock at this point in time? And what would you advise your clients for those who may be looking to enter the stock and perhaps those who have a very large share in this particular counter? What would you advise them to do?
See, Agam, frankly speaking, I think I was recently checking out a chart of some Nifty and large cap companies of the last 10 years. And very surprisingly, if you were to see the chart of ONGC in the last 10 years, it has delivered -3%, which goes to show that one should believe that over the last 10 years, the oil would have had its share of cycle, and good quality companies, especially in the upstream space, whenever the oil cycle is up, they tend to increase their production, they tend to increase their capacities, which helps them to resilient during downturns of the oil cycle. And very surprisingly, we saw oil going to abysmally low levels of $25-30, and now again coming back to levels of upwards of $70. Yet, I think what we see is destruction of wealth in a stock like ONGC. So very frankly speaking, I think it's probably best to give up all sort of hopes on such PSU-run companies, wherein I think the company does not have those free hands in terms of how it can grow like international giants like Exxon or for that matter Chevron. So I think it's better to focus on companies like Reliance Industries, who are kind of more independently run without any major government intervention, who are also trying to develop their upstream assets, which no doubt at current juncture are abysmally at low levels, but still I think the synergy of the business that they have in their oil and petrochemical business, I'm extremely bullish on its prospects for the longer horizon.
Yeah, well, interesting. And vying for the top spot on market cap between the two continues as well. TCS yesterday eclipsed Reliance. Let's see if that lasts or no. Anyways, before we get in our technical experts on board, and it's about time, it's also time for Bloomberg Edge, our special segment, wherein Jayesh Kilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's the stock on your radar today?
Morning, Neeraj. It's Canfin Homes. That is because 2 days back, the stock, in fact, breached below its 50-day moving average. And as of yesterday's close, the trender indicator has also been breached on the downside, indicating that there is a sell signal on the cards of Canfin Homes. Let's first have a look at the trender indicator and the theory behind it. It's a proprietary Bloomberg indicator which uses the average true range as one of the key inputs for calculation. Not only does it help you generate buy and sell signals, but also helps you to manage the stop loss. Now, you have to simply follow the color to get your buy and sell signals. You buy when the trender flips from red to green, and you sell when the trender flips from green to red. So let's look at the chart of Canfin Homes. And that's the last 6-month chart that you have seen, and the stock has been on a steady decline from about 550 levels to currently at about 330 levels. Now what you can see is this big red bar. This is where the 50-day moving average was in fact breached, and as of yesterday's close, this green line, which was the trender's support level, that has also gotten taken out, which means that there could be further downside as per the trender indicator.
Wow. Have you backtested this, Jayesh?
Yes, Neeraj. Backtesting shows that in the last 1 year, if you had sold all the conditions given by the trender, net profit would be in excess of 20%.
Okay, well, thanks for that, Jayesh. We'll be watching out for Canfin Homes based on the trender, of course. But with that, let's get in a technical analysis from our technical experts for this morning. We have Samit Chavan, Chief Analyst for Technicals Derivatives at Angel Broking, joining us. And we also have Raja Venkatraman, Chief Technical Analyst at Chart Advice, who's joining us on the show. Thank you guys for joining us. Raja, I'm going to start off with you. How are you approaching the benchmarks at this point in time?
Yeah, if you see the movement which we have seen in July, we have seen almost 800-point rise in July. So after 2 months dullness which we saw in May and June, the July was quite active. And historically, August has been either a dull month or a range or a negative month. So we foresee that this month also would have a similar pattern. And the reason being that the large caps have actually taken the index quite well since the consolidation in mid-July. So we had a 500-point rise since then. And after that, right now, majority of the large caps have done with their results. And right now, the large caps like Reliance, ITC, SBI are actually holding the indices up. Right. However, with majority of the result season being over, and also the news triggers also coming over. The Fed has also left the rate unchanged. RBI has come out with it. So
you believe it will be dull?
Yeah.
But what's the trade then for somebody who wants to?
Yeah, I'm coming to that.
Okay.
So the trade is that the Nifty has reached pitchfork resistance and also Fibonacci confluence. So I feel that the Nifty will come back to the gap levels where it began the series. It began the series with the gap, the August series. So that's in the region of 11,170 to 11,225. So the overall picture is still bullish, and one should look to buy in the dip region of around 11,170 to 11,225. And the intraday charts are suggesting that there are some divergences appearing, and we could witness a pullback to these zones.
Okay.
And contributing to this fact is also the bank Nifty, which pipped its previous high. But the private banks are now giving up, and you can't expect PSU banks to make the case for a stronger bank Nifty. So with all this put together, you should actually look for a pullback buy rather than chasing the indices at higher levels.
Okay, so not shorting. So the target is not that, but essentially that's the buy range at which Raja believes you could buy the index.
Correct.
Samit Chavan, good morning to you as well. What are you doing? What would you be telling your clients to do today on the indices?
Morning, Neeraj. Our bias remains positive. During the mid-July, we witnessed a bullish diamond pattern breakout somewhere around 10,800 and 850 on a weekly basis. Since then, we have been quite upbeat, and we have been, revising our targets as well as our stop losses. So, revising stop losses always gives you comfort. The earlier base, last month it was around 10,500, shifted to 10,800, 11,000, and now around 11,200. So, with an immediate view, 11,200, 250, according to us, would act as a very strong support. And in such kind of strong market, unless you don't see Nifty closing below its previous day's close, the momentum remains positive, and you should trade with a positive bias. It will happen once, but until then you could ride this tide. So our bias remains positive. One can go long on any dips. As far as for 1 or 2 days target is concerned, we believe that 11,430 is on cards, and eventually Nifty would move toward 11,500. So for a time being, 11,430 would our target, and one can keep a stop loss somewhere around 11,280.
And stock ideas you like today, Samit?
We like two mid-cap counters. One would be MCX, which has already given a decent price volume breakout a couple of days back from its recent concession zone. Yesterday there was a subdued movement, but we would interpret this as a good buying opportunity. Weekly chart looks quite promising, and hence MCX can be bought for a target of 931. It's a positional target with a stop loss of 858. The other buy call would be on Jai Corp, which is from the cash segment. If I just look at the daily weekly chart, this stock has been consolidating since last 2 to 3 months. Day before yesterday there was a decisive price volume breakout, and if I just look at the RSI smoothened oscillator on daily chart, it is now pointing northward. So that's a positive sign, and we believe that yesterday's consolidation would be a good buying opportunity. One can go long for a target of 179, stop loss at 149.
How about you? What stocks are you betting on today?
Yeah, I would like to go with one long and one short. The reason being that the current market situation is indicating a possibility of a two-sided move. So I would go in with a short in Tata Global. Its results also were negative, and on the weekly time frame it has been continuously making lower lows, and right now it has given a large breakdown. So I advocate sell in Tata Global below the current levels with a stop loss of 5 points, and drop towards 228 to 225 is the expected target.
Okay.
And Godrej Industries is on the buy side. It's given a good movement and a range breakout over its last 4 months consolidation.
Right.
And the MACD indicator is also indicating a positive setup. So all this plus consistent sustaining of the higher levels is indicating that one could actually look at a buy opportunity in Godrej Industry. So Godrej Industry buying at 647 with a stop loss of 637. A target of around 665 is what I foresee for the day.
Right. Okay. Parthiv, we have less than 30 seconds, but just a quick thought on Excel Crop Care, if you track that one and the development thereof.
Is needed, extremely bullish, and it's always very fair to see for the common shareholders when a parent company like that of a Japanese nature, Sumitomo, allows its private company in India, which has been in existence since 2000, to have a merger with the listed entity. I think gives a very fair valuation to the shareholders, and there's a lot of synergy in the two businesses, the plants that Excel Crop Care has, and I think this is a very fair deal, and that's probably the reason why the stock has done extremely well. Yes, valuations on the face of it are pricey, but if I were to look at the long-term prospects of these two merged entities and the synergies that it brings along, very bullish on this stock.
Okay. Well, we just have about 10 seconds to go for pre-open, so I'm going to pull up the SGX Nifty at this point in time. And, well, it's down by as much as 11 points now, as against being marginally in the green earlier in the morning today. We're likely to see the effects of weakness in the Asian markets play out. But what are the pre-open rates indicating? Okay, so the Nifty has begun with a negative tick of, well, a little less than 1%. As the Sensex, that's actually diverging, and that's showing an increase of around 0.6%. Among the few stocks that we are watching out for, let's pull up ONGC. It's going to announce its earnings today. Is it likely to see traction ahead of its earnings? Likely to see an opening in the green by as much as 1%. Indiabulls Housing Finance is the other one on the Nifty we're going to keep an eye on. That's also indicating an up move. We've had volumes for Hero MotoCorp, and well, they're largely in line with street expectations, and that's indicating a green tick as well. Eicher Motor Enfield volumes, on the other hand, are a tad below expectations, and on account of which we could see some weakness come through. That's a 0.5% decline as far as its pre-open rates go. We've had Coal India yesterday, which was the top Nifty gainer. Are we likely to see profit taking or further strength? Pre-open rates suggest 1% up move at this point in time, and Lupin was the other one which did see some amount of traction towards the long side, and that's seeing an up move around 0.4%. Finally, let's pull up Hindalco and ICICI Bank from the large caps, because those were the two stocks which were really under pressure and also putting pressure on the indices. Hindalco is down by as much as 0.7%, and ICICI Bank, well, that's down as much as 3.4%. Of course, we're going to wait for some of these rates to stabilize and settle down. But what else are we tracking, Neeraj?
Excel Crop Care should come up on the screen, Agam, and let's see what that stock is doing in the session today. A stock in news after a 6% up move yesterday, nothing major. And we'll ask Parthiv to explain this in greater detail, but he seemed very positive with the development that has happened as well. 2% higher, long-term prospects look good. Stock starts off marginally higher. Bring up Dilip Buildcon, might start off well. Remember, Dilip Buildcon, there is Himadri Speciality, Venky's, all of these get out of the ASM category, and maybe, just maybe, there could be some positive moves into some of these stocks, so do watch out for them as well. Venky's to about 6% higher, Dilip Buildcon is 7% higher, so decent start to that. Manpasand, I have the numbers, is up about 5% in trade, so do watch out. What's gone off? Muthoot Finance is down about 7% today. There is some weakness probably in Parag Milk Food, so do watch out for that. And we'll watch out for the likes of Page and the others, because they've done reasonably well until now. Let's see if the momentum continues out there. HEG is the last one that I want to spot because the numbers were very good. Well, up another 5%. Maybe the Graphite too should be doing okay for itself, 2.5%. But let's wait and watch what happens there. We'll talk about all of these stocks. HEG starts off 5% on expected lines, which is damn good. And you'll hear the management, by the way. Ravi Jhunjhunwala of HEG would be speaking to us at about 9:30. So you got to stay tuned for that as well. We'll talk to the management about what the outlook ahead for the year looks like. So that's something that you need to stay tuned for. However, well, stay tuned for Yatin Mota, because he joins us right now. Earnings recovery and domestic flows have propelled Citi to raise the 12-month forward Sensex target to 37,300 from the earlier target of 35,700. Yatin Mota is here to tell us the rationale that Citi is used to raise the target by what, Yatin? 1,400 points?
1,600 points, Neeraj,
yes.
and that is something that Citi has been talking about in their report. Now, if you look at the strategy, it's clear they are expecting to see a 25% growth in the remainder of FY19. Clearly, right now, earnings, ex Tata Motors and corporate banks like ICICI Bank, Axis Bank, and Bank of Baroda, we have seen a good growth. And for the remainder of the year, a 25% kind of a growth for the full year is what they are anticipating. Of course, this will be driven by, almost 50% of that will be driven by financial, is what Citi is expecting. And as they roll the estimates, from December 18 to March 19, their model is showing a 1,600 points increase in the overall, Sensex target. The current Sensex target for Citi is now at 37,300 points from the earlier, estimated Sensex target for the next 12 months, which was 35,700. Now, apart from this, they also believe that the domestic ownership of stocks has improved significantly. Over the last 2 years, domestic funds have seen an inflow of nearly $50 billion, and probably that is also supporting the overall markets. Bear in mind we are trading at almost 60% premium to the emerging market pack, and that is something which is a worry point for Citigroup. Apart from the general elections and the crude price, these are the few 2-3 points in which Citi has been raising red flags. But that apart, they are overweight on 5 stocks, which is SBI, HDFC Bank, L&T, NTPC, and Tata Steel. However, they are underweight on stocks like HDFC, TCS, HUL, ICICI Bank, and Reliance Industries. So the big 5 boys which have run up, there is where Citi is underweight on. However, stocks like SBI and NTPC, who have been the underperformers this time, are overweight as far as the Citi strategy is concerned.
Right, Yatin, thank you so much for joining us and giving us those updates. Of course, watch out for the Sensex target. As per Citi, we're likely to see a further impetus over the next 12 months. But a component of the Sensex is Maruti Suzuki, and I do want to discuss that. We've had, well, the earnings come through. We've also had your volumes come through. Samit, leave the fundamentals aside. How are you reading the charts on Maruti? Because it is getting a little confusing when it comes to trading bets on Maruti Suzuki.
Yes, the stock has clearly slipped into a consolidation mode. Recently, there was a breakout from a bullish flag pattern somewhere around 9,400, 9,500. After that, we did witness, some kind of strength in this counter. But immediately, what we saw is the stock tanked from the levels of 1,900. So that clearly indicates that the earlier, bullish flag pattern has now been negated. So what we believe is the stock is now likely to consolidate. It is likely to see some kind of time-wise correction, probably for next few weeks, wherein on the low side you would see some kind of buying coming in around 9,000, 9,100, which seems to have very strong support. At the same time, whenever this stock inches higher, 9,800, 1,900 would act as a very strong resistance.
Okay. Stocks which are in news today out of the ASM category, Dilip Buildcon, Himadri, Venky's, all of them are looking like starting off on a good note. Wondering there is a trade here. Raja, do you track any of these names?
Yeah, I've been tracking Dilip Buildcon, and I find that over the last almost 1.5 months, it's made a double bottom on the charts, and also a divergence is seen on the daily charts, and it's given a good breakout. So a move above 810, 815 would augur well, because it really is giving a very big target in the region of around 180 to 200 points. So the way it has fallen down over the last few months, and if the momentum really picks up, then this could again get back into its heydays, and you could see this target of almost 180 to 200 points being achieved.
So you will buy it
once
opening up 7% higher, you'll be comfortable buying it?
Yeah, at least buy on dips towards 810, 815 is what would be the approach I would advocate if the overall setup looks good.
Okay, so buy on dips is Dilip Buildcon. Now that's the technical call. I believe Parthiv has a fundamental view on Dilip Buildcon as well. We've discussed with him quite a number of times. Parthiv, technical triggers out of the ASM category may propel the stock higher. Good investment candidate?
My sense is that if at all today the stock were to react very positively just because it's come out of the ASM category, it won't be a bad idea to exit. This stock has kind of re-rated itself. We saw new highs and then massive correction. One slight concern that I have is in terms of how good will be the execution going ahead with the current order book that this company has, and especially in an environment where the funding has become a little tight in terms of the working capital needs of many of these companies. And Dilip Buildcon has had a very good past track record, but I think true test is now how well the cash conversion cycle will take place. I find it more comforting to prefer, if I have to pick a stock in this sector, to park my money in KNR Construction, which has also massively corrected, but the quality of its execution, the order intake that is taken, gives much more visibility in terms of its execution capability. So I am a little wary of Dilip Buildcon, so I would suggest a sell on rise, but I think I prefer KNR Construction in this road sector.
All right, that's as far as KNR Construction is concerned. Of course, Dilip Buildcon will also be in focus, but I'm going to take a chart check on something like an Eicher Motors as well, and it's currently at around 26,670. Again, we're likely to see some weakness on fundamental reasons, but Raja, on technical basis too, are you seeing a weakness here? Because we have seen a little bit of a fall over the last few days.
Yeah, actually a move below 27,000. Actually, the charts are definitely indicating some weakness, and the momentum indicators are indicating that the trend could actually head lower. If it breaks below 27,000, you could actually see almost 600 to 800 point fall.
Right.
So that's the target which we are envisaging around 26,000 to 200 if it breaks the current levels.
Samit, what's the best auto stock to trade?
See, at this moment we are quite upbeat on M&M, though it's a steady move up, and since last 1.5 month the stock has been consolidating. But overall, if you see daily, weekly, monthly time frame, the stock looks in a steady structure. So we believe that M&M probably could become a very good buy. It will take some time to reach its levels, wherein we expect 970, 980 odd levels probably in next few weeks. But one should start accumulating at current level with a short-term view as well, wherein 900 has become a very strong base. Earlier it was around 870, 880, and it has now shifted towards 900. So 900 has become your strong base. Keep a stop loss below that, and we would expect to move towards say 960, 970 over the next few weeks.
Okay, minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, amongst Nifty constituents, ONGC and Indiabulls Housing Finance will report numbers today. Among other key earnings to watch include a Capital First, Godrej Properties and Torrent Pharma.
Among results that came out yesterday, HEG, Jindal SAW, V2 Retail and Ballarpur Industries reported strong set of numbers. On the other hand, it was a weak quarter for Triveni Engineering and Reliance Infra.
Hero MotoCorp, Eicher Motors reported that July auto sales. Hero's sales stood at 6.8 lakh units, which were in line with street estimates. Royal Enfield numbers came in below estimates.
An agrochemicals firm, Excel Crop Care, will be in focus today as its board approved a proposal to merge with parent company Sumitomo Chemicals.
L&T has offered to sell 4% stake in L&T Technology Services. The floor price is set at 1,400 rupees per share with a green shoe option available as well.
And Shriram Transport Finance and Kiri Industries will be meeting analysts and investors today.
A bunch of those numbers. Actually, they're reacting well, some of the others to the ones that Agam spoke about. So HEG was one, but well, just look at what's happened to V2 Retail and Ballarpur Industries, and I think the reaction out there is pretty strong too. Parthiv, do you track any of these two names, V2 Retail or Built? I think Ballarpur Industries, the paper companies have by and large been doing well.
Yes, absolutely, Neeraj. But I think Built certainly has its set of worries, and since a very long time, there's a lot of rumor mongering that I think Edelweiss ARC, which is kind of handling the case in terms of Built, is going to help it try and turn around and also sell some of its assets. But all of that has not really materialized for the favor. The paper cycle is in extreme bullish stance, no two ways about it. Most of the paper stocks are doing well, but I think it's a very big risk, and it's a turnaround case which might not be well in terms of the common shareholders' favor. So I think I'm better off suggesting JK Paper. I think they are doing all the right things, developing scale, and I think it's a company definitely in the paper space which is kind of a must-have right now to play the paper cycle. So that should do extremely well in my opinion.
Okay, just minutes away from markets kick-starting trade. Let's get in the top calls from both our experts. Keep in mind the OMCs look like starting off on a positive note, so we'll talk about those as well in just moments from now. But maybe get in the top trading call from our experts as well. Okay, let's do that. Samit Chauhan, to you first. What's your top call for the day today?
I'll stay with JCorp. It is opening quite flat, so that becomes a good buying opportunity, offers good risk-reward ratio. So I'll go with JCorp for target of 179, stop loss at 149.
All right, JCorp it is. Raja, what are you spotting right now in terms of the top pick?
Yeah, looking at the market softness, I feel that I will go with a sell call in Tata Global.
All right.
Around 236 is what I am envisaging. The target of around 228. And the stop loss at 241.
All right. Target of 228 with a stop loss of 241. So we are expecting more weakness in Tata Global beverages. But well, with that, I'm going to toss it over to Neeraj. We're just a few seconds away from opening trade, and we have seen some cues coming in on account of earnings as well as volumes from the auto sector.
Hey, thanks, Agam, for that. 30 odd seconds left. If I may, if I may just take one quick view. Actually, we'll take this view on the Nifty Bank once the markets open with Samit Chavan. But the Nifty Bank looks like starting off on a weak hand as well. We'll discuss some of the target prices of the calls that have been given as well. But likely that we'll start off on a negative note or marginally flat, at least for the benchmark indices. And the Nifty Bank starting off maybe about 0.5% lower. Watch out for what happens to ICICI Bank and the likes and whether they are putting pressure on the index today or no. Yep, unexpected lines on the pre-open session rather. The Nifty Bank 0.5% lower and dragging the Sensex and the Nifty along with it. Mid caps and the small caps would probably have started off flattish to marginally lower. Bring up what's happening there. Yeah, flat for the small caps, marginally lower for the mid cap index. Get the heat map up on the screen. There should be more red, I would presume. Yeah, lot more red than green. Commodities have taken it on the chin today. Not on the chin literally, but starting off weaker. So Vedanta, Hindalco, Tata Steel, all three are starting off weak. Eicher Motors, because of the monthly numbers looking slightly wobbly, has also started off on a slightly lower note. State Bank of India and ICICI Bank amongst the banking heavyweights, which are starting off weak today. What's doing well? Well, oil and gas, HP, BP, IOC, ONGC, right up there amongst the top 4 gainers. So those 4 companies to watch out for. Aside of that, nothing worth writing home about, to be honest, at least at the large cap end of the market. What about the mid caps and the small caps? And what about specific pockets? I just want to mark 2 or 3 before I hand it over to Agam. Firstly, the result reactions that have come in. So the likes of HEG, V2 Retail, Built, and all 3 start off on a good note. HEG in particular, actually it seemed like it'll start off on an upper circuit, but 4.5%. Nevertheless, hitting new highs for itself in the session today. So good start for HEG. The others too, not doing all that badly. This is one set of names, XL Crop Care, the reverse merger, and the market likes it. So was up about 4.5-5% in trade yesterday, adds another 2%, does XL Crop Care to itself in the session today. So good start for that one as well. Last but not the least, stocks which are out of the ASM category, and that's the list to focus on really. All 3, or at least there are 5 of them, but the 3 of them that I'm spotting right now, starting off on a good note, 5, 6, 7% apiece for each of them. So brisk start to these stocks. Agam, what are you spotting?
Well, 8K Miles Software is looking at an uptick right now in the broader markets. It's locked in an upper circuit of around 5%, and quality is not too far behind. So we're starting to see a little bit of recovery in some of these stocks which have been heavily shorted over the last few weeks. Reliance Naval is the other one which is also up and about at this point in time. And we have Ramco Systems, which is also advancing in trade by up as much as 3.5%. And on the losing end, we do have some weakness in something like an L&T Technologies. That's down as much as 3%. And we also have Gati, which is down around 2.5%, followed by something like a Bombay Rayon. That's down as much as 2.2%. On the whole, there isn't too much to speak for. The momentum is clearly with the gainers at this point in time, even though the advanced decline ratio on the NSE 500 at this time is 2 gainers for 3 losers. But the traction is certainly with those which are advancing in trade, especially the ones which have come out of the ACM list.
Okay. Just quick thoughts, final thoughts from our experts. Samit, the Nifty Bank, the last 3 days now is under some spot, not really a big terrible spot of bother, but starts off lower again today. Would you use this dip to buy, or would you believe lower levels are in store?
No, I think, 27,300, 27,250 seems to have very strong support. ICICI Bank, Axis Bank, they've rallied quite a lot in last 4 or 5 days. So they are seeing some kind of profit taking, and which is quite evident also after seeing a decent rally of nearly 15-18% in a span of 2 weeks. So we would just interpret this as a pullback move, wherein for Bank Nifty, 27,350, 27,300 seems to be very strong support. So in case of dip toward those levels, yes, it would be a good buying opportunity. And over the next few weeks, we'll not be surprised to see Bank Nifty again retesting its recent highs, which is in the zone of, say, 27,800, 27,900.
Raja, opening thoughts? Anything that stands up? The OMCs have started off well.
Yeah, the OMCs have started off well, but actually that's largely due to the softness in crude oil which we are witnessing. But that is, I feel that the charts of Hind Petro is worth considering, but it would need to move above 310 to see some kind of positive momentum coming into play. Till then, it's actually a wait and watch on Hind Petro. But out of all the OMCs, I feel Hind Petro is looking set for a good recovery.
All right, well, there you have it. I'm going to take the moment to thank all 3 of our experts, Raja, Samit, as well as Parthiv, for joining us and taking us through their views on the markets. And with that, we move on to a special voice, Pramod Gubbi, the Managing Director and Head of Institutional Equities at Ambit Capital, joining us on the show. Pramod, good morning and thank you so much for joining us. Let me just start off with the underlying macros at this point in time. What have you made of the RBI's monetary policy yesterday, and what is your anticipation with respect to the interest rate trajectory? Thereby, what could it mean for the Indian equity markets?
I think the RBI's move was pretty much in line with our expectations, given the developments in the economy, which is clearly marked by a very strong recovery in underlying demand. To the extent that, like the RBI governor put it, I think we've pretty much closed the output gap now. Any further increase in demand without a supply side response is going to be inflationary in nature, and that's pretty much why the RBI took that preemptive rate hike to address any sort of spike in inflationary expectations as we go by. Alongside that, if we have the government spending on rural development programs, MSPs and so on, that will add to the inflationary pressure, and that had to be dealt with right away. Going forward, I guess there's at least one more hike this side of the calendar year before, at least one more hike, if not more. And it all depends on, I guess, how the government goes about implementing the MSP program, particularly the procurement policy, which would be out sometime in September. Depending on how that goes about, we can ascertain how much of first round or a second round effect on inflation that could bear, and that could drive further interest rate hikes or just one, like I said. So yes, I guess there's one more coming at least.
Interesting. Pramod, what have you made of earnings thus far? I've now seen 3 notes in the last 2 days. Some talking about how, had it not been for the 2 corporate-facing banks, the numbers would have been largely in line. Citi's note today seems to suggest that they are very happy with the earnings thus far, and they believe the rest of the year holds in store a potential to have another 25% rise in numbers too. What have you guys at Ambit made of the season thus far? What stood out for you?
I think it's been a good earnings season. But definitely, we are seeing recovery in earnings, something that the market was desperately anticipating, given we had 2 years which were disrupted by different sort of events, be it the demonetization or the GST. I think while I would acknowledge that the earnings have been strong, we need to concede that some of it is because of the base effect that we saw last year, June quarter, which was the quarter which was anticipating the GST move, and there were sort of inventory sell-offs and stuff. So, and hence, you could have seen better numbers because of that weak base in some ways. Having said that, I think we are in line for perhaps our first, close to double-digit earnings growth for the index after almost 4 years. So we are headed in the right direction as far as corporate profitability is concerned. But then, valuations are a different matter, whether valuations have already factored in. In fact, valuations have been anticipating these sort of earnings recovery. It's about whether we can improve from here, from consistently seeing downgrades over the last 3-4 years. Can we see the first earnings upgrade cycle? That is what will drive markets further. That is what will drive valuations, which are already, like I said, anticipating this sort of an earnings move.
Right, Pramod, let's talk about a few sectors. At this point in time, we've had earnings of a lot of these auto companies come through. What have you made of the sector? Because we're clearly seeing some amount of volatility, despite the fact that earnings have not been so bad. What do you make of them, especially keeping in mind the valuations at which they're currently trading at?
I think autos have been, a strong performing sector over the last year or two anyways, except maybe for two-wheelers, which perhaps are seeing some signs of recovery now. But I think each category is slightly different from the other. To that extent, I think commercial vehicles have some more legs to grow, given given the sort of underlying drivers, be it regulatorily or build up. But having said that, I think the sustainability of those volume growth is the question there, and which is why I guess the markets have reacted the way they have. Of course, there have been a couple of regulatory headwinds as well. On the passenger car side, I guess there are not too many plays, but whatever is there is doing well. But having said that, valuations aren't cheap there, so valuation is an issue there. So that leaves us with the two-wheeler side, which is perhaps a little more promising given valuations aren't that high. Yet we are seeing some sort of signs of growth coming, particularly in the form of exports, also in the form of premium bikes. Yes, there is a beginning of what looks like a price war at the entry-level bike segment, which could spoil the party. But of all the three segments, I think two-wheelers perhaps has, on balance, the better prospects within the auto sector.
Interesting. The belief from the Fed commentary seems to be that there will be hikes, two hikes, and you already adhered to that. Let's work with an assumption, Pramod, that there is weakness in the currency which will last, or at least the rupee will not recover some of the lost ground over the next 6 odd months. Does that put the exporters, and in particular IT, in a good shape? I know neck to neck, or rather net for net, there may not be a material earnings upgrade purely because of currency alone, but at least that small bit of tailwind exists and business momentum seems to be looking strong, at least if TCS and HCL technologies are to be believed.
Yes, indeed. I think that's a nice little tailwind, and I agree. I mean, fundamentally, there are other drivers which are working for IT, be it the overall IT spend. We are seeing the interest rate hike cycle putting profitability of some of the US banks, which is a large customer segment for the Indian IT sector, in better shapes, and that's driving IT spends at the macro level. And on top of that, I think the initiatives and the investments that the Indian IT sector has made in terms of some of the new capabilities is clearly auguring well for them in terms of taking market share and, in terms of order win growth as well, as the commentary by these guys suggested this time around. Alongside that, if you have a slight depreciation in the rupee, of course, it's clearly a nice little tailwind. While valuations aren't as cheap as what they were, say, 12 or 18 months ago, we've had a nice rally in the sector. But I think, it does have some more legs to go.
Right, Pramod, earlier we had the MSPs come through from the government. A little later on, we've had GSTs on a lot of consumer durables be reduced as well. This is clearly towards government trying to provide some impetus when it comes to consumption in India. That said, we're still looking at valuations. They are where they are at this point in time, especially when it comes to some of these staples. My question really is, what would you do at this point in time when it comes to staples? And perhaps if you could also offer your view on discretionaries.
I think consumption will remain the key driver for the economy. It has been, the investment cycle has been missing for many years now. So it has been consumption which is pretty much, keeping the economy going. And that's likely to continue, given the demographics, and also in the short term, given the political imperative to drive electorate. You will see some of the spending programs in that direction, and that will keep consumption quite robust. Having said that, I think valuations are perhaps at their highest levels across staples and discretionary, reflecting this sort of both a cyclical push and also a structural uplift in growth driven by formalization and the other changes in the economy. So on balance, I guess from a short-term perspective, you have some comfort in the form of growth visibility. In the longer run, I guess you just have to hope that these companies continue to compound at these rates for a long time to justify these valuations.
Okay. Pramod, my final question really is about whether post-earnings, post-correction, etc. I know you guys have a tilt towards the large cap because your institutional clients would be looking at the larger names, the foreign institutional clients at least. But is there, after this bit of an uptick from the lows at the mid cap and the small cap end of the market, a better risk reward at the mid caps and the small caps, or would you still be comfortable with the large caps? And I don't mean just the Nifty, but let's say the top 100, top 150 names.
No, I think it's still a more selective game, both at the large and small mid-cap game. There have been instances where the correction has been perhaps overdone or leaving some value on the table, but by and large, on a broad basis, I don't think the correction has been enough, and particularly, valuations are high, but also we are running into a period of further uncertainty. We will have political issues crop up as we progress towards the end of this year. We will have some sort of global macro also worsening. We're seeing, the liquidity tightening happening. So both from a global and local macro perspective, it is not a particularly great time to be invested in small and mid cap, barring the selective cases on a bottom-up basis where we're seeing very strong fundamentals backed by attractive valuations. So I would use a bottom-up stock-by-stock basis rather than trying to buy small and mid cap as an asset class.
Right, Pramod, we'll leave it at that. Thank you so much for joining us and taking us through your views on the markets.
You're welcome.
Well, there you have it. But we slip in a short break. But on the other side, we have Ravi Jhunjhunwala of HEG, Omer Dorman of Castrol India, and Pramod Khera of Repro India will join us with the fine print of the company's numbers. I've lost my line up. Stay tuned in.